Hi everyone. Ethics is an essential part to auditors when providing services to clients. We are going to talk to you about ethics in accounting and auditing. Now, accounting is a tool that you use to monitor all of your financial activities, and auditing is a tool that you use to monitor all of your activities, including your financial activities. And if you are not applying ethics when you are using these tools, then these activities are pretty much pointless. The topic we are discussing today is objectivity, one of the 5 fundamental ethical principles. You want to make sure that you have someone who is not biased, someone who is objective, because otherwise the results of your audit may not be the truth. We will present different scenarios that objectivities may be challenged, and how auditors should respond and the reasons for that. So, let's get started.
Being a professional auditor, there are 5 fundamental ethical principles need to comply with. Objectivity is one of those fundamental ethical principles. According to the Code of Ethics for Professional Accountants, the principle of objectivity imposes an obligation on every professional accountant not to compromise their judgment because of bias, conflicts of interest, or the undue influence of others. Occasionally, professional accountants face various circumstances which may impair their objectivity. If the auditor's professional judgments are likely affected by a circumstance or a relationship bias or unduly influence of others, the auditors should terminate the professional engagement of assurance services. To maintain objectivity, auditors are responsible to evaluate if any existence of threats to achieve objectivity during the engagement, which may arise from having interest in or relationships with a client or its directors, officers, or employees. For example, the objectivity of auditors may be influenced because of the familiarity threats, which auditors know the clients too well and leads to over-trusting of corporate management representations. In order to avoid those threats to objectivity, it is crucial to determine the significance of threats detected. If the potential threats are so significant, auditors need to identify and apply safeguards to eliminate the threats or reduce them to an acceptable level. When providing assurance services, auditors also ought to ensure that they are independent from their clients, so as to prevent from any subjective judgments. Regarding their independence of mind and independence in appearance should not be compromised. For independence of mind, it means that the state of mind which is allowed to express a fair conclusion without being affected by influences that compromise professional judgment. Therefore, auditors are able to act with integrity and exercise objectivity and professional skepticism. On the other hand, the independence in appearance refers to refraining from facts and situations that are clearly significant, in which a reasonable and informed third party, after balancing all the specific facts and circumstances, would be likely to conclude that a firm's or a member of the audit team's integrity, objectivity, or professional skepticism has been compromised. With sufficient independence of mind and independence in appearance, auditors will be able to express a conclusion without bias, conflicts of interest, or undue influence of others.
Hey, the sales revenue of our audit firm is not doing quite well recently. I think that we should try to explore some new customer by setting a low fee. Should we do that?
I'm afraid we can't do that because our fee is set by the estimated working hours and the audit hours that we are going to have with the clients.
Okay.
So we cannot lower our fee to do so.
As for low fee, audit firms usually try to adopt a low fee strategy to attract new clients. However, the audit fee set by the audit firm should be based on the estimation of audit hours needed for the clients. It is because of the fact that if the audit clients had a large bank loan or tax refund, more audit work has to be done to inspect the validity of the account. If a low fee is set which make the auditor hardly to cover their costs, they might have an incentive to do less audit work which will increase the risks of the account. Therefore, it is not acceptable for auditor to charge their audit clients a low fee too. To illustrate, there is a term called lowballing pricing competition, which means that firms or practitioners underprice a service in order to win clients. This is a phenomenon happening in the UK as audit firms are trying to grab more new clients. However, there is a sign of decline in quality clients received from the lowballers, as they take on more customers in order to compensate for the low price they charge. It shows that a low fee will affect the quality of the audit work, which proves that low fee is unacceptable.
Can you help me to make a financial report that could allow me to lend a specific amount from the bank? If you can do it, I will pay you, but if not, I won't.
I'm afraid we can't do so because we can't accept any contingent fee. We only charge it based on our service provided to you.
When it comes to contingent fee, according to the International Ethics Standard Board for Accountants, the definition of contingent fee basis is any arrangement made at the outset of an engagement under which a predetermined amount or a specific commission on or percentage of any consideration or saving is payable to the audit firm upon the happening of a specific event or the achievement of an outcome. In other words, the remuneration of an auditor is dependent on the attainment of a specific result for the client, such as a fee based on the amount of a client tax refund, or the amount of loan a client received from the bank. In my perception, the act of charging the audit client contingent fee is unacceptable as it gives rise to self-interest and advocacy threats. It is because the contingent fee puts the firm in the position of wanting the same outcome as management, as the auditor might not be able to get their remuneration if the outcome of their work is under the expectation of the audit client. They might have the incentive to perform a biased audit report which favors their client. This will create the self-interest threats and advocacy threats to the auditor.
So for this year, we have an audit client whose fee represents a large proportion of our own revenue. Do you think we have to find new clients to diversify our income pool and as well as to diversify the risk that we are bearing for now?
I think we have to, because I think there is a hidden independence. We will lose our independence, and there is a hidden self-interest threat. So we have to find a new client in order to diversify the proportion.
When it comes to the question that should the auditors have an audit client whose fee represents a large proportion, my answer is no, since this will pose a threat to the auditor independence. As a client whose fee represents a large proportion of the audit firm's total revenue with a greater bargaining power than the audit firm. This is due to the fact that the audit firm cannot bear the consequence of losing this client. This poses a self-interest threat to the audit firm as they do not want to lose their important clients. Therefore, the auditor of the audit firm will be less likely want to issue a qualified audit opinion or something that will cause an issue for the client because they are worried about losing the client. Therefore, the auditor should not have an audit client whose fee represents a large proportion of the audit firm's total revenue.
Hi Jackie, how's my company account?
Yeah, your company account is doing good, but we are still checking.
Oh really? So thanks for the service. I hope that nothing will be come to your mind that is really suspicious or very problematic.
From the above video, you can observe that the auditor is stuck in a dilemma of whether or not to accept the client's red pocket money. Receiving gifts and hospitality is pretty normal in our daily life and business environment. But if you are an auditor, you have to pay extra attention on it. Because once you or the people who have a close relationship with you accepted the gift from your clients, the threat of self-interest or familiarity threat may arise, and your objectivity as well as compliance will be challenged. Try to imagine, if you have received a valuable gift from your client, the obligation that conceals your client's wrongdoing in the financial statement may arise. Now, you may argue that, in reality, there is no way to avoid receiving hospitality or gifts from the client completely. Yes, it's true, especially in Chinese society. During the Lunar New Year, we will probably receive the red pocket money from our clients. As an auditor, we are allowed to receive the hospitality and gifts from our client as long as the value is trivial and inconsequential. The auditor has to make sure the offer is made without specific intent to influence decision-making or to obtain information. In such cases, we will consider those gifts are in normal course of business and the risk is acceptable. When talking about trivial and inconsequential, we do not have a strict standard on it. Instead, we will look at the nature, value, and intent of the gift case by case. Whenever you come across such a situation, you have to apply some safeguards, like for example, report the case to your senior supervisor or compliance team in your company. If the risk cannot be mitigated to an acceptable level, the last resort is stopping the business relationship with your client. In the video, the client gives the red pocket money to the auditor in order to smoother the audit process. It's obvious that the risk of self-interest will arise if the auditor accepts the gift. Now, let's look at how a qualified auditor should react to such a situation. 3, 2, 1, okay. Sorry, I cannot accept your legacy.
Just take it. Keep it, it's for you.
No, I have to
Just take it, it's okay.
I have to
Just take it. I have work to do.
Sorry, I cannot accept your legacy.
Just take it. Why give it back to me?
Because I have to remain my independence and objectivity.
Oh.
It's violate the law.
Oh, I'm sorry. I shouldn't do that. Okay.
All in all, objectivity is one of the most important fundamental principles that an auditor should have. Auditors should avoid any conflict of interest in the audit engagement and try to minimize the self-interest and familiarity threat. Accepting low-fee contingent fee of audit work or any reasonable gifts and hospitality may give rise of self-interest and familiarity threat. Furthermore, having a client whose fee represents a large proportion of the total revenue may affect your objectivity as well. In light of that, auditor must apply safeguards on the above issues, and the last resort is to cease the business relation with the clients. So now, I guess, you will know how to be an qualified auditor. Thank you.